almost every time we get here, the crypto market 10 or 20x's from here. Now, that's not a guarantee that it does it next time.
Hello everyone and welcome to the Daily Crypto. We are back with another value-packed video for you guys, and this time we have Raoul Pal with us. But before we get started, let's take a look at the Fear and Greed Index for today. As of recording this video, it is sitting at 24, which is the same as yesterday. Currently Bitcoin and Ethereum are trading for 19,117 and 1,283 respectively. With that out of the way, let's jump right into the video.
My view is that we're still paying for the effects of COVID that cause all sorts of problems, like nobody could manufacture anything, nobody could ship anything, planes couldn't go anywhere. And so as COVID started to ease, people came back out of their houses, back into the office, back to consuming things, and there were no goods to be bought because all the shelves were empty because nothing got manufactured. So that caused this huge rise in inflation. Then the next thing, the central banks think, oh my God, it's inflation, because inflation's pretty bad because most people's wages haven't gone up as much as prices have, so everyone feels poorer. So the central banks think, God, we need to do something about this. So that's the Federal Reserve and the Bank of England and all these guys, and they raise interest rates. And that usually slows down the economy. And it has. The economy is actually falling off a cliff because they probably over-tightened. So even though we kind of know things are bad, the forward-looking stuff that I look at using my kind of macro framework suggests things are going to get really quite ugly over the next 6 to 9 months. So what the Federal Reserve are doing when they raise interest rates is they're taking what's known as liquidity out of the system. So what they're saying to banks and others is, we're going to allow you to have less money to use around the system. So that means it's harder for anybody to borrow money. It's got more expensive, your mortgage has gone up, your rent's gone up, so everybody stops spending and the economy slows down. And that brings down inflation because there's less demand for goods.
Raoul believes the economy is in a pretty terrible state and is still desperately trying to recover from COVID. Since inflation is at an all-time highs, it has become more difficult for people to keep up with their lifestyles because their wages haven't increased in proportion to the rise in prices of everyday items.
But it has other effects as well. Obviously, people start becoming unemployed again, which, people were kind of saved a bit by COVID, by the stimulus checks and what happened. But this time around, there's nobody really wants to save them because the Federal Reserve has said, we actually want unemployment to rise. So they want you to lose your job. So you buy less goods, so the price of goods falls, which is kind of a bit screwy, but that's what they want. And that whole mechanism of the Federal Reserve doing this has unwound a whole bunch of asset prices. So the stock market fell. I think the Nasdaq's down 30% as we're speaking, and the S&P's down 25%. The bond market collapsed. It's one of the biggest falls in the history of the bond market. Housing prices are coming down very fast. The price of oil to the price of commodities has collapsed. The price of cryptocurrencies has collapsed. So it's been a really, really tough 9 months in financial markets and for people's savings and investments and potentially for their jobs too.
By increasing interest rates, the Fed is essentially making it difficult to borrow money, meaning they are taking liquidity out of the system by limiting how much money banks can use. This is taking its toll as unemployment is on the rise while financial markets get destroyed.
So crypto is a function of two things: technological adoption and the macro, the liquidity that the central banks are providing. Those two things are the key drivers. So if you zoom out of a log chart of crypto that everybody always tells you to do, you can basically see things like Bitcoin go up, just up over time, and up a lot. But it's very volatile. You get these kind of big ups and downs. So the question is what drives the big up, and then what drives the ups and downs? The big up is driven by the adoption of technology. There's now 300 million people using cryptocurrencies or investing in cryptocurrencies. It's growing at about 100% a year or so. It's the fastest adoption of any technology the world has ever seen. So people are adopting this twice the speed of the internet. That's why it's been so profitable, but it's also very volatile. And it's very volatile because when the central banks remove liquidity, which they've done in 2013, 2015, and various other points, cryptocurrency collapses because there's less money around for people. And this particular example, what's just happened over the last year, is to do with the fact that most investors in crypto are actually retail investors, and they dollar cost average. So they put in some of their paycheck every month. Now, the issue is if your paycheck's gone down, in purchasing power terms, you have less money to invest. So suddenly, cryptocurrencies are less active, the networks are less active, and the price has gone down.
Crypto adoption is on the rise as it is increasing at a staggering rate of about 100% every year. People are accepting it much faster than the internet, which is why it is extremely volatile. According to Raoul Pal, the reason why we are seeing cryptocurrencies collapse in value is because retail investors make up for a majority of the crypto market cap. Now that they are struggling to save enough money to invest, cryptocurrencies seem to have lost their momentum for a while. However, Bitcoin has proven to set new all-time highs after each cycle.
Big financial market participants that we've been waiting for to enter the market, some of them have. So these are the big pension funds and hedge funds and others. They're also struggling from lack of liquidity because their portfolios are going down from what the Federal Reserve are doing, so they have less money to put into crypto. So I spend a lot of time speaking to these big institutions, and they're all ready to get involved, but they just don't have the cash right now, much like we don't have the cash because everybody's feeling the pinch. So if everybody's feeling the pinch, it's not going to drive up the price. But once this situation eases, it'll start driving up the price. Now, there's another piece of magic that happens with crypto, is crypto doesn't do well in inflation because of the reasons I said. But when the central banks start printing more dollars or euros or pounds or yen or whatever it is, that's called debasement of the currency, quantitative easing. And that is when crypto does really well.
Even the bigger players like hedge funds are also feeling the pain by the Fed's rate hike as they have less money to play around with. When the overall macroeconomic conditions improve, we will automatically see cryptocurrencies take off in value.
There's two reasons. One, I think it resonates with people that it is a different answer to the financial mess that we live in. This hugely indebted economies driven by central banks and government policies, and people want a different way out. So it resonates as a narrative to people. But what's super powerful about crypto versus almost anything else is the fact of how it works with behavioral economics, because token systems are incentive systems by nature. So to explain it to you at a simpler level, Facebook is a viral set of products, whether it's Instagram, Facebook, WhatsApp. But we as users get to use those things, but we don't get any rewards except connecting with our friends or whatever. And the shareholders got rich as the network grew. So 3.5 billion people use Facebook technology right now. But with crypto, it's like we'd all been given Facebook shares. So imagine if every time you logged into Facebook or used Facebook, you got shares. So if you own part of the network, well, what are you going to do? You're going to tell everybody about it. Which is why you get this kind of weird world of everybody shilling cryptos, because it increases the size of the network and therefore the value goes up.
Raoul explains that the reason why we are seeing crypto adoption grow at such mind-boggling rates is because people have started to realize that the current financial systems are flawed and Bitcoin is the only asset that they can take full ownership of without the involvement of a third party.
We know that the adoption is going up, and the adoption of a network drives up price. It's called Metcalfes Law. So here we are at the most oversold levels almost in history of crypto. Yes, the price move has not been as big as it was in earlier stages, but the levels of how oversold it is are enormous. So here we are looking at this saying, okay, it's been driven by the macro, it's been driven by the central banks, liquidity, inflation, and our job is to look forward the next 2 years, 3 years, 5 years, and say, is this current state of affairs going to be permanent or temporary? Well, the history of economies is the business cycle goes up and down. It's cyclical. So, therefore, we're at the cheap levels, we're kind of at key trend lines, and almost every time we get here, the crypto market 10 or 20x's from here. Now, that's not a guarantee that it does it next time. So your risk reward is highly favorable. And you've got the shifting macro where we're going from maximum pain in the economy to starting to see the central banks change their course and start adding liquidity back because they've broken the economy.
Investors need to start thinking about cryptocurrencies as a long-term play, because the mess we are seeing right now is only because of macroeconomic factors. Their conditions won't last very long, and when we start to see the economy pivoting, the value of cryptocurrencies will start to skyrocket once again and potentially pull a 10 to 20x from here. Thank you for watching this video. Make sure to leave a like and subscribe to our channel so you can keep watching content like this on a daily basis. See you guys in the next video.